Hey folks, Dan Frio here with your real estate update for July 25th, 2025. So we're going to talk about in today's video, we're going to talk about interest rates because if you're watching this video, most likely you're looking to buy or refinance. But we're trying to figure out what's going on with these and the whys behind it. The headlines that we're seeing today right through here, Federal Reserve likely to hold interest rates steady, even with pressure from President Trump. And everybody's like, oh my goodness, more of this today. But yes, I want to explain to you guys why the Federal Reserve, they control this rate right through here, why that is messing up rates all the way across the board, because this is what the yield curve looks like, and it should not look anything like this. So we're going to discuss the yield curve, what the Federal Reserve might look to do at the next meeting, and why they should be cutting rates into this economy. So folks, let's get to today's news. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you out if you're looking to buy or refinance a mortgage. So I'll give you all my information at the end of this video. We have a slogan. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? I'll give you all that information at the end of this video. So you're here for these things. So let's get to it. Okay, so what you hear all over the news is basically Federal Reserve getting hammered by the Trump administration over their renovations now, but their lack of, I guess, just paying attention to things is what the president's saying. And here's the biggest topic. He's wanting them to cut rates. Why? Well, let's get over to it. Here's what the Federal Reserve controls. They control this rate right through here. Okay, this is normally equal to or right about where the inflation rate is. And the inflation rate they follow is the PCE, and the PCE is at 2.3%. Okay, so this is why the president's saying, okay, if you're Federal Reserve, if you're looking at inflation and the number you're looking at is 2.3, why are you keeping rates elevated at 4.25? So that's 200 basis points or 2% higher than where kind of inflation is. So they can pull out 100 basis points in rates and still not feel any effects, because even if inflation upticked based on the measure that they focus in on, even if this jumped up, 1% to 3.3, they'd be right in line to where they have the new federal funds rate. So that's where the president wants the Federal Reserve to do. Now let's go back in time to show you what a normal yield curve looks like. And it's not this. This is the yield curve that we have today in 2025. So in July 24th, that's close enough. 2025, this is what a normal yield curve is. So normally what you see is the front end of yields. Well, let's do this. Let's go over to one I created let's go over to here. In 2011, here's what a normal yield curve should look like. The front end of the yield curve should be very low in rate. Look at this one. It's like 0.25%. And as it goes through time, you're getting rewarded for tying up your money for a longer period of time. So this is somewhat of what a normal yield curve looks like. Not like this. Do you see how high these rates are? So the President Trump is saying, okay, Fed, if you lower these, that's going to bring down these, and that'll stabilize the markets throughout here. That's what they're saying. I hate to say it. At this point, I can't disagree with them, because we're getting more and more and more tariff news into the economy, and the inflation isn't jumping. We don't even have unemployment jumping right now. The concerns right now are corporate profits and how this is going to affect people and everything else. But right now, we're not seeing a huge spike in inflation. Now, I'm not saying that can't happen, but even if it does, look how much cushion is built in. We're at 2.3. Let's just assume inflation spikes to 3. You're still 150 basis points overpriced. So that's what the president is trying to say to Powell, because also this is the rate that banks pay. And if you bring down interest rates in general, the government owns. Let's go back to this, because a lot of people are saying I'm not mentioning this anymore. So let's get to the national debt clock. So national debt clock. We'll get over to that. And let's see where the national debt clock is putting us right now. And this will help in this range. $37 trillion and growing and growing and growing. But if we cut the rate on this, that's a massive loan. If we start cutting the rates on the national debt, that'll help on interest costs. Just like when you're looking to refinance possibly on your home, if you have a high interest rate and then you refinance to a low rate, it's going to save you money. That's exactly what the government is doing. So assume that is a $37 trillion mortgage. And if you can refinance this at a lower rate, what would it do to your monthly payments? What would it do to your budget? Be good news, right? Okay, so that's what's trying to happen right now between the government and the Federal Reserve. That's the big complexity that we have right now. So if you go to the economic calendar, let's see some other economic news that we're getting for today. We got core durable goods month over month. It was 0.6. It was supposed to drop to 0.1. It actually came in a little bit better than expected. Now look at durable goods orders. Even though they fell off a cliff at minus 0.9 or minus 9, it's better than the minus 10 that they were expecting, but it was quite a drop off. The last reading on durable goods orders was 16.5. A lot of people were kind of expected that they front loaded to beat the tariffs, and it looks like they did because durable goods orders plummeted quite a bit through there. We're going to focus in on later today. I will have a live event explaining to you what the economic calendar looks like next week that might be affecting mortgage rates. But later this afternoon, we're going to get the Atlanta Fed GDP giving us a little bit of a read on the economy. If you want to look at what the economy looks like and what the Federal Reserve monitors, let's go back to this chart right through here. So here's what the Federal Reserve does. They control this rate right here. That's the only rate they control. Okay, this isn't a rate that you pay on anything. It's basically interbank lending. Okay, so what happens though is banks follow what the Federal Reserve does on their short-term loans. So on short-term loans, if the Federal Reserve drops the rate, well, you're going to see car loans, credit card loans, personal loans, interest rates dropping as well. Okay, so what they've analyzed is right through here. They analyze inflation, unemployment, and the GDP. We have inflation at 2.3. They're wanting this at 2. Pretty darn close. You want unemployment at basically at a historic rate of 4. Well, we're right there along with that. So no real spike in unemployment. So we didn't see a massive increase in inflation. Didn't see a huge spike in unemployment. And GDP is supposed to start shooting positive. So if you look at this overall, it's not a bad economy. It's just money is too expensive. And that's what the president's trying to explain. So that's what we're focusing in on there. What the Federal Reserve is going to do at the next meeting, guys, they're meeting in 5 days. What are they going to do? We know what they're going to do. If you go down through here, the federal funds rate, like we just said, is 4.25 to 4.5, right through here. There's a 97% chance they're not going to do anything. They're going to hold rates steady. But now look at the probabilities going forward. They're going to cut rates at the September or October meeting because there's almost a 90% chance between the two of those that there's a cut coming. Same thing with December and January of 2025 and 2026. Look like also a 90% chance one of those months we're going to get a cut as well. So stay tuned, folks, because rate cuts are coming. But does that necessarily mean mortgage rates are coming down as well? So let me go over one last thing. Let me say this. I don't care if you hate Trump or you love Trump. Let's focus on one thing. President Trump was a real estate mogul. You might believe it or not or want to admit it. He's not going to want to go down as the president that crashed the housing market and crashed the stock market and the bond markets with interest. He's not going to want that. He's going to do everything in his powers to make sure mortgage rates come down. And they're going to work on the 10-year Treasury and everything else like they're battling with the Fed right now. They're going to do everything they can to bring down interest rates to pump up the housing market. That then is a fuel for the whole economy. Now, my pro or choice of that, pro or con, well, time's going to tell. I don't control what he says or he does, but we do need, everybody complains about housing is being too expensive. Well, the interest rates are a huge part of that. So if we drive down interest rates, that's one part of more affordability in housing. But we need more construction of more affordable homes, folks. You can't just say, well, we just need home prices to crash because more and more people have home or need homes. Well, you can't have that happening unless a whole mass amount of people put their houses on the market. What you're seeing in today's environment, though, is this. People putting their house on the market at even maybe higher prices than they're even expecting to get. And they're doing this. They're waiting to see if they get nibbles or bites or somebody who jumps on that price. And then they'll take it. If they don't get what they want, and they know, many people know it's a higher valued priced home or higher price on that home, they're going to say, I'll just rent the thing. It cash flows because if you've owned your house for 5-6 years, you have a ton of equity, most likely, and you have a rate probably at 2-3-4%. And with the rates today like this, a lot of people are just saying, okay, I want a bigger house or I want to trade down. I'll just rent my other house because I'm at a 2 or 3% interest rate. I can cash flow. Why would I want to sell that with basically money on that financed at free money at 2-3%? So that's what a lot of people are doing right now. That's why you're seeing home sale prices completely crashing and home prices hanging steady. And that's what my assumption is for the next year. And until interest rates really drop, you're not going to really see anything going on with home prices other than a little bit up and a little bit down. Now, a lot of people, they're going to say, okay, Dan, the charts that you're giving, because I did a live event yesterday going over home prices and things like that. And I hate doing that, but I wanted to show everybody the housing market isn't crashing. Now, what a lot of people are going to say is, well, Dan, Austin is down 5 or 6%, so your national average is wrong. Well, think of it this way. A national average is this. It blends all the communities. So you can cherry pick one area and say, okay, that's down 5%. But what does that mean if the national average is up 1? Well, that means another area complemented that. So it was 5% up plus a little bit more to bring the averages up. You understand what I'm saying? So if Austin's down 8%, that means another area is probably up 10% to balance out the national averages. That's what you got to think of. And that's why a lot of people, if you see the national averages going up and they're saying the housing market's crashing, they're cherry picking. Okay, so that's what we're focusing in on, because we focus in on this channel on where the heck interest rates are going, and that's helping you understand the housing market and then housing in general. So that's what we focused in on today, folks. So that is my report for this morning. I'll be back later today, but right now, here's what we're seeing across the board on the indices. Let's go to the Dow Jones and see what those indices are doing across the board, and then we'll get to the mortgage rates here in 1 second. Oh, this is a little bit slow. Let's go across. Whoa, it's still green. There is nothing going on today. Absolutely nothing. Look, the Dow Jones is up 24, NASDAQ's down 20. So basically a net wash there. We got oil up a little bit at $66 a barrel. You guys know how I feel about this. Why I harp on oil when it gets over $65 a barrel, then it really gets inflationary. When you get to $70, $80 a barrel, it's really going to push up the inflation numbers, and we don't need those during these uncertain times. And then we have the 10-year bond. It's up 0.01. Ain't really nothing to write home about. Let's go over and see what crypto's doing for the day, and it is, whoa, it's getting hammered today. So I might jump in and buy a little today, because in a couple days it'll probably be up to 119 again. So don't do what I say. I'm just giving you some feedback on what I do on my personal life. So never trade off of what I recommend. Make sure you're just doing it for educational and entertainment purposes only. So that's my report for today, folks. My name is Dan Frio. I'm a national federally licensed mortgage loan officer. So if you're looking to buy or refinance, I'd love to help. Now let's get to that slogan I have. One application, one credit pool. We're going to shop your loan over 30 different lenders. How does it work? Well, basically, folks, I work at a federal bank. I'm a federally licensed loan officer, meaning I'm licensed in all 50 states as well as Puerto Rico. So if you're out there watching, I can most likely help you. But now here's what we do. How do we get you we compare rates with 30 different banks? Well, here's what we do. We're set up with 30 banks, credit unions, and mortgage lenders. What we do with your application, when you put in your application, we know you're shopping for rates, so we're here to help. So we're actually in the background comparing your rates with 33 other lenders, and I can use their programs and their rates. One of the programs they're offering right now, one of the lenders, is right through here. It's up to $7,000 in down payment assistance. So if you're struggling for that down payment, check and see if you qualify for this program. If you're looking to refinance, click this button right here. What I want you to do is let me know what interest rate you're looking for to refinance. When the rate hits that, I'll be making sure I reach out to you. We get the paperwork started, lock you in, and go over what the numbers look like. And if you've already got a quote and you want me to compare it to the 33 other lenders we have, well, here's the loan estimate tab right through here. You're going to click it, upload your best loan estimate. Now, if you got 2, 3, 4, here's what I want you to do. Call the lender with the best estimate. Say, I need your best foot forward because I'm going to get one more offer, and if it beats you, then I'm going to go with them. And I need you to be honest with everybody, okay? Then upload it into this. Let me compare it to the 33 lenders. If we can beat them on fees and rates, I hope you would join us, because otherwise you wasted your time and you wasted mine doing all these analysis, and I can help you out. So that means if you reach out to us and we can beat the other offers you have, we're hoping that you move over to us based on the knowledge, the expertise, and all the education that we provide. So my name is Dan Frio. I'm here to help you guys out. If you need some assistance with this, please go to our website, therateupdate.com. You can give us a call right through here. Ask me a question, folks. Just click through here. What I'm going to do is this sends me an email. I'll respond by a text, email, or I'll even send you a video answering your question. And then you can check out a whole bunch of other tools we have on our website as well. So thanks for watching. I'll be back later this afternoon with a live event to explain to you guys what economic events are coming next week that we should pay attention to. One of the biggest ones is the Federal Reserve's meeting next Wednesday, letting us know what they're going to do. So thanks for watching, guys. I hope you learned something today. God bless. Have a fantastic afternoon. I'll see you later today at the closing bell. Take care. Bye-bye.